Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate with your host, Kevin Perenio. As an owner and C-level executive for 20 plus years in finance, KP is here to serve you with all of his knowledge and experience. Whether you're a broker, realtor, or just interested in the economy, this is the podcast for you. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Gas Lamp in San Diego. It is NAREP, the National Association of Hispanic Real Estate Professionals, Latitude 22. They do this once a year down here in San Diego. It's a really good show. And today was the first day, Thursday. You guys know I like to do my videos on Mondays and Thursdays typically. It's about 10, it's 11, which is early for me, West Coast. Been here for a little bit, trying to catch up on email. And Gary Costa, the founder, their group, they do a great job of just putting out content, speaking specifically to Latino homeownership, Latino business ownership, just Latino involvement in politics and society. And they're one of the fastest growing segments of first-time homebuyers, the fastest growing segment of first-time homebuyers in America. So give Gary and his people a shout out. Que onda mi gente? That's what he likes to say. What's up, my people? What's going on? All right, so we're here in San Diego. I like to do things from the different locations that I'm on the road. Quick plug, staying at the Pendry Hotel. Had food here at Lionfish. Pretty cool. There's a local event here I got tickets for the San Diego Real Estate Professionals. I'll be going in there shortly. But it was Fed week. Fed week. Huge week. You looked at your stock market account today. If you have one, you got crushed. If you look at your rate sheet, you got crushed. Why do we all get crushed? We buy and sell money. We buy and sell money in the mortgage business. That is what mortgage-backed securities are. They are backed with the collateral of the land and the home, but everything gets broken down into securities. And the Fed, up until not too long ago, has been buying mortgage-backed securities at a high level. They're just now talking about selling them off and reducing their balance sheet, which is like $9 trillion, including the treasuries. Treasuries, which are seen as the safest bet in the world, backed, obviously by our government and the U.S. dollar. That's a big part of the liquidity that has been put into the market. But liquidity is what has created inflation. It has, that's a skater. Liquidity has created inflation. It's created an abundance of money in our checkbooks, and whether it's come from PPP funds or any kind of pandemic assistance or whatever the case may be, all the bills that have passed over the years, the last couple of years, there's a lot of money in our system, and that money has competed for things like goods and services and everything we do every day. And obviously, you talk about inflation, they say the invisible tax. It is more visible than ever. Your food, your energy, your gas, everything. Cars. When in your life could you sell a used car and make money? This is stupid. Semiconductor chips. There's not enough computers to be made. It goes on and on and on. It is visible. The Fed came out and announced yesterday, Jerome Powell, at their meeting, that they are going to squash inflation. They are going to crush inflation. That is what they are going to do. And there may be some pain in the meantime. That's the Pendry, gorgeous hotel. There's going to be some pain in the meantime to do that. So they have never, at the Fed, raised rates as fast as they have, as quick as they have. Remember, we've had zero funds rate for like 15 years. We've had free money for 15 years. We got a bunch of other central banks around the world that are having to raise their rates and are raising their rates. even with recessions pending, some in, with inflation there, except for Turkey, which has like 80% inflation and they cut their rate. Anyway, modern monetary policy is about injecting liquidity into systems to inflate economies. And remember, 2 years ago, we were in a pandemic, everything shut down. We thought we were going to deal with a massive deflationary environment, so we had to reflate it with liquidity. And now we're dealing with that overshoot. So we've overshot, and inflation was not transitory, but the dollar is strong. It is king dollar. It's the currency of the world. It's the reserve currency of the world. Every other country around the world has to have dollars to buy their goods, and the dollar is strong. And it's expensive to own dollars if you're in any other country not named United States of America. So what happened in the mortgage world? Well, mortgages, are backed by mortgage-backed securities, which are a little less safer bet than treasuries, but they're still a very safe bet typically. And mortgage-backed securities, everything sold off hard when the Fed had their announcement yesterday. Like these pipelines that lenders have, we all took losses. Like we all have locked pipelines, and the market had what's known as a market shock. Every single lender tests their hedge and their pipelines with 100, 150, and 200 and 250 basis point moves. We had that move. We had basically a 100 basis point move. That's a massive shock. Big pipelines getting crushed right now. You don't make a lot of money just because the market moves one way or the other. You have to hedge your pipeline on locks you take in. And then those positions are out of the money. People are hurting right now. Doesn't matter. We buy and sell money. I don't want to get into too much of the technicals, but some crazy shocks going on right now. That guy just made serious eye contact with his Lil Jon song. Anyway, no Lambo. If you'll notice, the road is blocked off here, so I'm not going to get smoked by some car. All right, so let's get into some real hard news before we shut this thing down. I apologize if it sounds a little slow, a little rambling. We are winding down a very long week, a very busy week. Okay, so existing home sales, not as good as we thought, but housing starts was good, and multifamilies are up, like 1.5 million housing starts, annualized 630,000 are from multifamily. That multifamily catch-up is what we need to get rent under control, because a lot of the CPI numbers, the owner's equivalence rent payments, rent's going up. You know what? Tell your borrowers, I know we're looking at 6.5% rates to buy a new home, but rent's going up too. So depending on what market you're in, rent is going up as well. Home prices are coming down. They're still up about 14.5% year over year, but home prices are finally starting to cool off a little bit. But the multifamily starts for housing starts is good. That's good for renters. Hopefully there'll be some more product online. But the population just keeps growing. It's not like we're not still growing our population. People are living longer, and that may have some reckoning in the years to come. But for now, there are a lot of people that are new, first-time homebuyer age, millennial, that are looking to buy a house. Shelter is shelter. It's not just an asset. So Brian Moynihan, CEO of Bank of America, he said that we need higher rates. We need to get rates up. He thinks that will help cool off the 20% year-over-year appreciation we've had in housing. There's a lot of stuff going on there. One last housing note. I saw an article on IMF today. It said, are lenders losing money? So it's very interesting. There's a price war going on. And of course, if you're going to chase that price on a loan level, every lender is losing money. Every lender is losing money. I'm going to say it again. Every single lender chasing the price that's been in the market the last couple of years is losing money on a loan-by-loan basis. But you can sell servicing or dip into your reserves or cut your costs or try and find more volume and retain your teams to offset those losses. I don't plug PRMG a lot, but we made money for the first 6 months of the year, and we didn't have to sell servicing to do it. And we have servicing, and we make money on our servicing. So, unfortunately, it's a very tough market. A $1 trillion back half of the year is typically a good year. A $2.3 trillion, $2.4 trillion year is typically a good year, but it doesn't feel as good when it's down 50% from the capacity that we have. So we'll be watching. More to come. Have a great weekend. Cheers. Hey, it's KP coming to you live from Chicago. We're at the Mortgage Collaborative, Lowe's, and we got lots going on here. Hey, KP. TMC, what up? KP, TMC. We are here on a day when there was an absolute epic meltdown in the market. And I know we talk a lot about secondary and what's going on, and I think it's important for us to talk a little bit about what that means for you and the company you work for. So remember, the Fed is drawing liquidity out of the system by raising the rates, and that affects every single financial instrument, including mortgage-backed securities. Now, what happened today was a complete and total liquidity event where the market said, okay, bonds are selling off. We don't know where to mark them. So the market did not mark them. And that's not really an exaggeration. So, mortgage-backed securities were trading, they're typically trading a 1 really liquid coupon. It's been like the 5 coupon for some time. And I talked in my video a couple weeks ago. By the way, I'm on a road here. This is Michigan Avenue, I think. So I'm gonna try not to get smoked again. I just totally jaywalked. Anyway, when we buy and sell money, and when there are less buyers because people don't know what price to pay for an asset because the market is moving in what's called a market shock, 100 basis points or more, lenders have to have a hedge or have some coverage, hopefully, to cover locks that they can't even mark to market. I mean, today's capital markets desks, people were freaking out, experienced people, are like, holy smokes, like, is this the pandemic starting all over again? No. The answer is no. We don't have a credit crisis. We don't have a complete government lockdown going on right now. So, for what it's worth, we just live to fight another day, and we'll see when the market opens tomorrow and see if there's going to be a marking of mortgage-backed securities. So you may have noticed some craziness going on at your lender and with the rate sheets, and that's okay. It was a crazy market. So I just want people to know, like, you could look up, we use MBS Highway at our company. There are many other tools out there, Mortgage Coach, a ton of other ones, where you can see what mortgage-backed securities are trading for, and you can see how volatile it's been lately. And like I said on my last video, lenders have to have really deep pockets to weather margin calls and cash positions and pair-off fees and, money that's out of the market, in the market, one day to the next. So it's just something that, we all have to deal with. So I thought I'd touch on it a little bit. I just walked down up some stairs and to get you a little sunset there. God, it's so far away. It's so pretty though. Chicago's nice when it's not cold. It's chilly here. So what are some other things about money that can rattle our industry that we don't control? So I read an article about venture capital fund, I think it's called Elliott Management. They are buying, I believe, Citrix for $15.5 billion. Now, what's interesting is, this is how, why does this matter to housing, right? Remember, we buy and sell money, and there's a lot less money flushing around in our system. So what happens is, Elliott Management buys this company, the corporate bond, the corporate debt that many large institutional investors have on their books, they see as a somewhat safe bet. They start losing their value. And so when this transaction took place with Elliott Management, several giant institutional investors lost $700, $800 million. Now, if that's an institutional investor that's also in mortgage or backing a real estate company or whatever the case may be. And I don't know who those players are. And we all know who the Wall Street firms are. And you just have to watch it. They're going to go, okay, I thought Citrix, the software company, was a safe bet. I just lost $700 million on it. I got this company over here that's running at a loss because the Fed is trying to break the economy. Maybe I don't want to play in this space anymore. So, so it's good to be an independent mortgage banker where you just focus on mortgages. You just have one thing you focus on, you just fight and deal with whatever comes your way. But that is known as a contagion when, people are over levered or they lose money and they have to cut costs somewhere else to make up for those losses, or say, you know what, I really need to take a hard look at this line of business that I'm in. It doesn't make me any money. Maybe I don't have the stomach to stay in it. So some companies are playing the infinite game and we're in it for the long haul. Some are not. And everyone's showing their colors right now. And there's a ton of M&A going on. There's a lot of merger and acquisition that's going on. I won't speak to any of them right now because I haven't looked at the trade rags, but hedge fund companies and back companies are going to do what they're going to do. They just look at this business differently, I think, than the local realtor and originator. So, we will continue to watch what happens when the Fed tries to break down inflation, which they've said will mean that the economy will have to slow and jobs will have to be lost because there's a wage price spiral. And hopefully, we have a soft landing. So anyway, from a positive perspective, you can only control what you can control. And that is your actions and who you make calls to and mining your database and your habits and your daily habits. Do you actually work 40 hours a week? There's a lot of people in sales that, one of the great things about our industry is that you can have a very flexible schedule as an originator or a realtor. But are you grinding it like the ops staffs are at our companies? Are you grinding it 8 hours a day on the clock or more and just constantly working? Work from home environment has reduced productivity in America. I'm not saying, this for everybody, because I know there's people out there who work very hard, but, we've had it really good the last couple of years. And I'm going to say something I said, to our own internal staff. We're all working twice as hard for half the money. So if you want to make the same kind of money, you got to work 4 times as hard. But the good news is there's still tons of business getting done. There's tons of people looking for houses. There are borrowers out there. They're getting ready to do what they got to do. And we just have to find them, meet them where they want to be met, and give them the service they need, and just keep providing the value every single day, whatever your value proposition is. So anyway, here, the Mortgage Collaborative, the lenders here are, they're all mostly independent mortgage bankers. There's some banks that are here, regional banks. And I think the mood is actually generally like, hey, you know what? This isn't a credit collapse. This is the Fed pounding the table on inflation. And I think between now and February are the roughest time of this cycle. And here's what we're doing to continue to build our platform, help originators be better at their craft, and realtors gain more business when they pair with a local independent mortgage banker. That's it. Everyone's pretty positive. So here we are. I think this is actually Michigan. Yeah, Michigan. I'm sorry. I guess I was on Columbus earlier. So here you go. One last little view. If you hung out all the way with me, almost got hit by this guy. It's not a KP video. Walking the street, if I'm gonna get hit by a car. Maybe I just go right in the middle of the intersection. I got 12 seconds. All right. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.